Have you ever tried to get inside an exclusive club and the bouncer won't let you in, but then you had this savvy friend who figured out a sneaky way to get you in through the back door? That's exactly what a backdoor Roth IRA strategy is for high-income earners. So are you a high-income earner, maybe an attending physician, and you've been told that you can't contribute to a Roth IRA? Well, that's half-truth. So in this video, I'm going to talk about three things. First, we will talk about what a backdoor Roth IRA is and who it is for. Second, I'm going to give you a step-by-step guide as to how you can actually contribute to your Roth IRA account using this strategy. And third, I'm going to talk about some pitfalls that you really need to be aware of before you get started. Hi, and welcome to the Money Matters MD Show. I'm your host, Dr. Abhishek Gadre. I'm a practicing pulmonary and critical care physician, and I absolutely love to talk about personal finance topics. Before we move on to talking about backdoor Roth IRA, I want to make sure that you're familiar with how a regular Roth IRA account works first. And I have a whole separate video which goes into the three different tax buckets and how the Roth bucket is important and how it saves capital gains taxes in the long run. And I also show you visually using a case scenario that how a Roth IRA account can save you a ton of money on the future growth and capital gains of your investments. I'm going to attach the Roth IRA 101 video right here once it's published. So let's talk about who is a backdoor Roth IRA for. So high-income earners above a certain threshold are not allowed to contribute directly to a Roth IRA. So for example, if you're making more than $165,000 as single, or you're making more than $246,000 as married filing jointly as of 2025, you're not allowed to contribute directly to a Roth IRA. But you can still pursue a backdoor Roth IRA strategy. And what this backdoor is, it's actually the traditional IRA. So you can actually contribute a non-deductible contribution to a traditional IRA and then convert that money to a Roth IRA. And there you go. This is a completely legal tax strategy and a loophole which allows high-income earners to contribute to the Roth IRA account. And I'm going to show you step by step how to do this later in this video. The contribution limits to the backdoor Roth IRA are exactly the same as a regular Roth IRA. For 2025, it's around $7,000 for individuals, and the catch-up contributions for folks above 50 is about $1,000, which makes it around $8,000. And it goes up slightly for 2026. These are projections, but the final numbers are not out yet. I'll update the slide. I'll publish a separate video once we have 2026 final numbers. So here's a massive pitfall that I want you to be aware of before you get on board with a backdoor Roth IRA strategy. If you already have a SEP IRA account or a traditional IRA account or a simple IRA account, basically all of these represent a pre-tax IRA bucket. And if you have any money in these, I want you to draw it down to zero before you get started with a Roth IRA backdoor strategy because of something called a pro-rata rule from IRS. So let me explain to you what the IRS pro-rata rule says. So let's say you had $93,000 in your traditional IRA account and you contributed $7,000 in your traditional IRA account with the hopes that you will just convert that into Roth. Now you have $100,000 sitting in your traditional IRA account, of which $93,000 is pre-tax and $7,000 is after tax. Well, the rule says that when time comes to convert this into a Roth IRA, you can't just pick the after-tax $7,000 and convert that. The government wants you to pay tax on 93% of the entire amount. So now if you're going to contribute $7,000, you actually will pay taxes on 93% of the $7,000 you converted. So you'll actually be able to convert only about 7%. So $490 you'll be able to convert tax-free, and the rest of the $6,510 will be completely taxable conversion. And that's why it's just easiest to have a zero balance in your traditional IRA before you get started. Now, if you do carry a balance in one of your traditional IRAs or SEP IRAs, there are two ways you can get rid of it. First, you can just roll it over into your current employer's 401k plan. If they allow that, it'll just end up in the pre-tax 401k bucket. And the second method is more painful, is number one doesn't apply to you. You can actually choose to take a tax hit and pay tax on the entire amount sitting in the traditional IRA and convert the entire amount into a Roth IRA just once. So moving forward, you won't have to deal with any balance whatsoever in a traditional IRA at the end of the tax year. The YouTube analytics tell me that a lot of you viewers are not actually my subscribers right now. If you would like to support my channel, please hit that subscribe button and like and share my video. So here's a step-by-step tutorial for how to get started with your first backdoor Roth IRA contribution. So step number one. So I've already been through this step. I want to make sure that you have a zero balance in any traditional IRA or any SEP IRA or any simple IRA. If you have anything more than a zero balance, I want you to convert it to a traditional pre-tax 401k or pay taxes on it, just like I described earlier, just because of the IRS pro-rata rule. Step number two, now you need to go ahead and open a traditional IRA account. So I'm going to show you an example of Vanguard, and you basically go to vanguard.com and start an account application and open a traditional IRA account and just go through the steps. Now, because this is a new account, I want to highlight that you're starting with a zero balance in this traditional IRA account at the end of step two. Now, step number three, I want you to transfer cash in your traditional IRA account. So first you will have to attach a checking account with your traditional IRA account, and you will have to use your account number and routing number and establish a electronic bank transfer. And what Vanguard will do is send you 2 micro deposits to your checking account. They're usually like a few cents. And once that happens, it takes about 2 to 3 business days. You log back into your Vanguard account or any whichever brokerage you've chosen, and you would put in how many cents you received on the other end, and then you verify, and now you have the account attached. Now, once you have an attached checking account, I want you to transfer however much you want to contribute to the backdoor Roth IRA for this year. So for example, for 2025, you're going to contribute $7,000. I don't want you to try to do this every single month and divide it or try to automate this process. If you're doing a backdoor Roth IRA, I just want you to do it in one chunk once a year and just do it manually every single year. Now, in case of Vanguard, this money will take about 2 to 3 days to settle into a settlement account, which is usually a Vanguard Federal Money Market account. Now, step number 4 is I want you to now go ahead and open a Roth IRA account. It's the same exact process which you walk through to open the traditional IRA account. This is just a second account. And mind you, I want you to open the Roth IRA and traditional IRA with the same brokerage company. So for example, if you're using Vanguard, I want you to have both accounts with Vanguard. If you're using Schwab or Fidelity, don't try to split accounts in 2 different companies. It's just going to be inconvenient. Now, step number 5. So this is the step when you log in, and once the money has settled in 2 to 3 days in your traditional IRA settlement account, now you can go ahead and click convert to Roth IRA button. So there is a bold button in Vanguard website which says convert to Roth IRA. It's as simple as that. So once you click on it, it actually opens a whole Roth IRA conversion navigator. You basically just walk through all of the steps. I can't show you every single one of the steps because of privacy concerns, but I've shown you most of them to walk through it. And I want you to remember to convert 100% of the entire amount that you contributed to the traditional IRA. I don't want you to leave a single cent behind. Remember the pitfall, the pro-rata rule. You don't want to leave any amount behind in your traditional IRA at all. Now, here's a common question I get all the time, that you contributed $7,000 into your traditional IRA account, and the 2 days it took for that amount to settle, because Vanguard uses a money market account, that $7,000 by the time it settles becomes $7,000 and 1 or $7,002. because that $1 or $2 is the interest that you get from the money market account. And people get really concerned as to, oh my God, how am I going to convert more than $7,000 into a Roth IRA now? Well, there's two options. First, just go ahead and convert the entire amount because you don't want any single cent left behind in the traditional IRA account because of the pro-rata rule. And the second option is moving forward in future tax years. What you can do is just contribute $5 less. You can contribute like $6,995 if you're just really so worried about that $1 in growth. And even if you contribute $7,000 and becomes $1 extra, all you have to do is pay tax on that $1 extra. So it's not such a big deal. Now, step number 6 is probably the most important step, you guys. So this is the step in which you actually invest the money that you put into the Roth IRA. Well, guess what? When I was an intern, somebody asked me to start a Roth IRA account, and I figured out how to do it, and I put in $200, and I didn't even realize that I never invested that money. And then I only figured it out by the time I graduated. 3 years later, I found the $200 just sitting pretty beside my 401k account, and it was really funny. So it's going to take about 2 to 3 days for the Roth IRA conversion to settle into your Roth IRA account. Once the money has settled, now what you can do in Vanguard is log into your Roth IRA account, and you will see the amount sitting in your settlement account, and go ahead and click on transact, and then you can go ahead and buy a mutual fund or an ETF. Let's say you pick VTSAX, which is the Vanguard Total Stock Market Index Fund, with an expense ratio of 0.04%. And you know what? You just have to rinse and repeat every single year. So step number 7 is at the time of tax return filing, you will actually get a tax form from Vanguard or Schwab, wherever your account is at. It's a 1099-R form. And remember, this is a tax-free transaction. Unless you have that $1 or $2 in growth, you can pay taxes on that. And one extra form that you need to file is Form 8606, in which you basically converted from traditional IRA into a Roth IRA, and this is not taxable either. And if you have an accountant or a CPA, they can take care of that for you. So here's 4 take-home points for you guys. Number 1, Backdoor Roth IRA is an incredibly powerful tool for high-income earners to have tax-free growth in their retirement portfolios. Number 2, regardless of your income level, even high-income earners like attending physicians can contribute to a Roth IRA. They just have to use the Backdoor Roth IRA strategy. Number 3, beware of the IRS pro-rata rule, because I don't want you to get into trouble. Just make sure your traditional IRA account balance is 0 at the end of every single tax year. And lastly, don't forget to actually invest your money like I did when I was an intern. Comment down below what brokerage firms do you guys use. I showed you an example of how Vanguard's website looks like and how Backdoor Roth IRA conversions are done. Now, if you're using Schwab or Fidelity, just so other viewers can get benefit out of this, can you guys comment down below? Is there a button similar to convert to Roth IRA like I showed you in Vanguard? Is there such a button in Schwab or Fidelity? Well, if you learned something useful today, please like and share my videos and subscribe to the channel. Money Matters MD, over and out. The Money Matters MD show is for educational and entertainment purposes only. This is not financial, legal, tax, or medical advice.